Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Shut up and take my money.
That is an all-time low.
And the old bear is back.
I'd buy that for $1.
Telling me, dream.
Hello and welcome back to the No Holds Bar here at Equity Mates HQ for another edition of Buy or Sell. I'm your host, Adam Keily, widely regarded as one of the simplest minds in finance. But luckily for us, of course, I'm joined by an expert to educate me and hopefully you on how they're thinking about stocks and the stocks they're thinking about. But this isn't a deep dive. We're going to get through as many stocks as we can in the time that we've got. And you can, of course, find out more about each stock on the Equity Mates website. But let's get stuck in. Today, I am thrilled to be joined in the No Holds Bar by Michael Gable, Managing Director at Fairmont Equities. Welcome, Michael.
Thank you.
Michael, we do like to kick things off here in the No Holds Bar with a bit of an icebreaker. I'd like to offer you a beverage, and the signature cocktail today is the Gold Fashioned, because we are going to be talking about gold a little later on. Have you heard of the Gold Fashioned before?
No, I haven't.
No,
only the old fashioned.
Only the old fashioned. This is it's a sugar lump soaked in bitters with cognac poured over the top and then sprinkled with edible gold. Take your fancy, or can I get you something else?
Yeah. No, I like the cognac, but it's only 9:30, so we might stick to the
No judgment here at all, Michael, in the No Holds Bar, that's for sure. Edible gold. They say you can't eat money, but you can eat gold, apparently. All right, let's get crack on. We've got some good stocks to get through, and we're going to kick it off with BHP, the big hole punch. BHP currently trading at $40.67. Michael, BHP, is it a buy or a sell for you?
Oh, look, around these levels, you'd be looking to buy it. So the thing with commodity stocks is they're very cyclical, but what that means is they go up and down depending on the economic cycle. So what you need to try to do is find that point where they're back at the bottom of the cycle. Everybody hates them. And as long as, the economic growth looks good and the macro environment looks good, in the future, then that's the time to buy it. And I think that's the point that we're at now. So, we've seen a situation where the share price has fallen from about $50 to $40. Everyone's worried about a global recession, but, we'll get interest rate cuts. And I know that the Chinese economy isn't doing very well at the moment. And, everyone hates BHP at the moment. The hedge funds are shorting it. As I said, this is the time you need to be looking to buy it. So, we look at charts a lot with what we do, and around these levels, I think you're going to get some good buying support pretty soon.
Right, and is it BHP in particular, or are there other miners that sort of fit that bill as well, or you really like BHP?
Yeah, just BHP is a bit of the obvious go-to, but I think most miners can do well here. So the reason is over the past 10 years, there's been underinvestment in a lot of miners. So, technology stocks were all the rage for 10 years. That's where all the capital went. So given that these companies have been starved of capital, you're going to see supply issues. We've seen that with copper this year. And I think when you get increased demand next year, as we get those interest rate cuts, you got higher demand with lower supply, and you'll start to see an uptick next year in 2025. So, now's the time to look at commodity stocks.
All right, excellent. BHP is a buy.
I think I'm going to buy.
Next, we're looking at QBE Insurance. Not just insurance, I found out. Masters of the clickbait headline too. Their top post on their website was titled, "Ever wondered what a day in the life of an underwriting graduate at QBE looks like?" Michael, I don't know whether you've ever wondered that, but I couldn't help but click.
Can't wait to read it. Who does their marketing? That's terrible.
Have you ever wondered what the day in the life of an underwriting graduate looks? No, I have not ever. No. All right. Currently trading at $16.08. Michael, QBE, is that a buy or a sell?
I think it's a sell here. So these insurers have, as we all know, have really increased their premiums. over the past, few years, and the share prices have done okay. But when you have a look at inflation data, what you find is that insurance premiums tend to lag everything else. So as inflation's coming down, I think those premiums will start to come down as well. And as we could see from some of their recent results, I think we've already seen the best of those premium increases. So I think now's the time to start to sell QBE. Again, because we look at charts, I can already, start to see the trend roll over. So I think it's a sell here. And generally, I don't like insurers because, as you know, who knows what's around the corner. I mean, as good as these underwriting graduates are, they can't predict if there's going to be a flood tomorrow or another cyclone. Yeah. And then before you know it, they're up for hundreds of millions of dollars in claims. So I think now's a good opportunity to get rid of it.
I actually wasn't aware that insurance premiums ever came down. It certainly feels like that for me, at least. I can't remember the last time my insurer called me and said, "Good news, we're taking your premiums down a notch."
Yeah. Maybe on your car insurance if they, reduce your car value by half, which they sometimes do. But, it's the only time.
Very good. All right, QBE is a sell. Next, we're going to look at gold ETF, Global X Physical Gold, ASX Gold, GOLD, currently $34.22. Pretty simple. You can own gold without having to fill up your storage vault. You can save it for storing your crypto wallets in, I guess. What a crazy world we live in. Michael, gold, buy or sell?
Definitely a buy. So
yep.
I've mentioned the ETF, but most gold stocks, most of the major gold stocks on the Aussie market can be bought here because generally I just think the gold price will head higher. So it is hitting sort of record highs at the moment. And there's basically, three things that should drive that. So the main thing up until now has been central bank buying. So a lot of central banks around the world are starting to, they have been buying a lot more gold, a lot more than what they used to. And there's various reasons for that. I mean, we don't have all day, but I mean, one of the main reasons is there is, I guess, a view that, a lot of major countries like China are trying to move away from using US dollars, so they need to be backed with gold. So there's a lot of purchases of gold. Gold also moves inversely to the US dollar. So as the US dollar falls, the price of gold goes up, and we've been seeing the US dollar head lower, mainly because share markets are starting to head higher, and also interest rates are coming down. So, they will be coming down because the market's forward-looking. So, as interest rates come down, high interest rates is a negative for gold because gold doesn't give you an income. But if you can't get much of an income in the bank, then suddenly gold starts to look more attractive. So there's a number of reasons. Again, technically, we look at the charts. Gold looks very strong. So I'm expecting, quite a bit of upside from here. So gold's a buy.
I think I'm going to buy it.
Gold to buy. All right, excellent. Okay, next we're going to look at WiseTech Global Limited, ASX WTC, currently trading at $120.14. They're in logistics, which should make their share price easy to track. Buy or sell WiseTech, Michael?
It's more of a cheeky sell. I've brought this in as a sell. Look,
I love a cheeky sell.
The reason, and the reason why I say that is I do like the business. They're doing really well. Long term, I think the share price can head higher. This is more for those who like to do a bit more of a short-term trading with their portfolio. So, and the reason why I say that is they posted their results last week, knocked it out of the park. The share price was up about 30% in 2 days. And I think for a company like this, if you're playing the probabilities, most likely after a big move like this, you'll see a share price just maybe head sideways for a while.
Okay.
Until you get the next catalyst. That's not a guarantee, but I think, again, after such a big move up, what I've done for some clients, not all of them, is sell WiseTech here at the end of last week, given that might be dead capital for a few months, and then we can rotate into something else. So look, I like the business, but if you're a bit more short term, you might want to use this opportunity to sell into strength.
Okay, it's probably worth noting too that we're recording on the 26th of August, and people might not hear it till sort of 5 days after this. So perhaps one to keep an eye on. Don't rush out as soon as you hear this and sell it. It could have already changed by the sounds of things.
Yeah, look, I don't think it's going to fall back in a great way unless something dramatic happens overseas.
Sell! Woo!
All right, WiseTech is a sell. Next, we've got Goodman Group, ASX GMG, currently $32.56. And Goodman Group claim they're rethinking tomorrow, Michael. I sometimes wake up and rethink what I did last night. But rethinking tomorrow, that's innovative. Buy or sell for Goodman Group?
It's a buy. So Goodman Group is a very large property trust, mainly involved in industrial property, arguably the best listed property trust in Australia, so stick with quality. They just continue to knock it out of the park. So, they've got some great developments. They've got very low vacancies. They always seem to turn up to earnings and, at least come in line with expectations or beat expectations. So, property should do well from here. It should continue to do well, especially as we get interest rate cuts next year. And Goodman Group is pivoting more into data centres. So as everyone talks about AI and the requirement for data centres increases, Goodman Group's already making those, making the moves into that area. So they reported their results. It was about a week ago at time of recording, and their guidance for next year was a little bit less than what the market expected. So the share price came down a little bit. Okay. But I think that's an opportunity because Goodman Group tends to be very conservative with their guidance. So they're likely to upgrade it over time. So I'd be using these levels as a buying opportunity for Goodman.
And they've got some of the big customers, right? Like Amazons and the Amazons of the world are their customers.
Yeah, they've got all the big names. Yeah.
Yeah, brilliant. All right, hey, let's take a break here. We'll grab another gold-fashioned perhaps. Hey, if you've got a stock you want to hear about on the show, let me know. You can use the contact form at equitymates.com or flick me an email, contact@equitymates.com. We'll be back with more buy or sell right after this.
And the old bear is back.
I'd buy that for $1.
Welcome back. You're listening to Buy or Sell, coming to you from the No Holds Bar. My expert today is Michael Gable, Managing Director at Fairmont Equities. Michael, we've got another bunch of stocks to get through here. We're going to start with CSL Limited, ASX CSL. No stranger to people, I'm sure. CSL, makers of blood products, vaccines, and as I found out, anti-venoms. Owning CSL could be a good hedge against snake bites, perhaps. Currently trading at $309.52. Michael, buy or sell for CSL?
It's a buy. I know it might seem a bit boring, but a lot of investors in some ways have almost forgotten about CSL because in the past few years, the share price hasn't gone anywhere. It's just one of those, we know it's there in the back of the portfolio, but, do you buy it here? It's not doing anything exciting. Other healthcare stocks like ResMed have fallen due to concerns on Ozempic
and other things,
affecting their business, only to rally again. So, that's exciting to trade. But no, with CSL chipping away, they've made a number of acquisitions over the past few years. Obviously, the share price since COVID hasn't really made much progress because COVID did disrupt a lot of their blood collecting business. But just looking at some of their recent results and the inroads they're making in Europe, I think they're well positioned over the next few years. I think one catalyst for their share price could be, again, interest rate cuts later this year. The last time we had a situation where the US went from raising rates to cutting rates was in the beginning of 2019. And in that year, the share price for CSL went up about 50%.
Okay.
Now, the reason why it affects CSL is because it's an expensive stock. So high PE stocks are very sensitive to interest rates. So just something to bear in mind. And again, because we look at charts, just the way it's traded over the past few years, to me just looks like it's just taken a really big breather after that massive 2019 run-up. And it does look like it's starting to get out of that range and get ready for an uptrend again. So I think next year could be good for CSL.
I think I'm going to buy it.
Well, I'm more than happy to make boring money, Michael, that's for sure. So if it does well and it's a boring stock, then I'm still happy to include it. So, all right, CSL is a buy. Next, we've got Telstra Group Limited, of course. ASX TLS currently trading at $4.03. My dad owns Telstra shares, but he still considers his home phone good value. I think it's because he's getting a dedicated fax line as well. Michael, Telstra, buy or sell?
Yeah, it's a sell. It's funny you mentioned your dad's got Telstra. I mean, it's widely held. It's just widely held amongst people of that generation because it pays a dividend. So when you get to a certain age, you feel as though you need dividends. But the problem with Telstra is the share price usually it has gone down over time since listing. So, look, I think at this point, it is a sell. They had a pretty good year. They grew their earnings last year by about 10%, ratcheting up prices for all their mobiles. But it generally doesn't grow much. It's a very mature business. It doesn't grow their earnings much. With the dividends that they pay out, not all of it is from the cash that they generate. So, you get what looks like a decent dividend, but I think up here at $4, the price will struggle again. So you're at risk of losing some of your capital. We have to remember 2022, 2023, not good years for the market. So a lot of money sort of moved into Telstra and Woolworths and the other defensive. So I think they're a bit expensive now because of that. And I think as, again, interest rate cuts and economies start to improve over the next 12 months, the money will move from those defensive stocks to the more cyclical stocks, like the miners that I mentioned. So I think up here, probably as good as it gets for Telstra for the time being. So it's a sell.
All right, I'll give my dad a call, but I think he's out at the moment, so I'll leave a message on his answering machine.
Well, at least, just don't get the fax line by accident.
All right, Telstra is a sell. Next, we're looking at Macquarie Group Limited, ASX MQG, currently $211.24. Macquarie Group, surely the big five now, isn't it? I looked at ANZ's market cap is $87.92 billion. And Macquarie is only 7 billion. I say only 7 billion, but only 7 billion behind on 80 billion. When can we go with big five? I feel like Macquarie's getting the short straw here.
Yeah, I mean it should be. We should speak of it in those terms. So if we did, then at least a lot of people would look at Macquarie as an alternative to the other banks in their portfolio. The reason why, obviously, a lot of people have the other banks in their portfolio again is the dividend. Now, the dividend for Macquarie, you're only earning a couple of % a year less than what you get in the big four banks. But as we know, over time, their share prices of the big four banks, it doesn't really go anywhere. They've had a good year this year. I think if you're a bit more of a long-term investor, you should put money into Macquarie Bank. You give up the dividend for the first year or two, you get a little bit less. But, the business grows much better over time, and that dividend will catch up. You'll end up with higher capital growth. So Macquarie, it's just basically a proxy for global growth. Capital markets should improve next year, etc. It's in a very nice uptrend, which is what we like. So it should just do well with what I expect will happen with the global economy next year.
All right, Macquarie is a buy.
I think I'm going to buy it.
All right, let's look now. Let's get some pizza. Domino's Pizza Enterprises, ASX DMP, currently $31.77. They're looking to bounce back after launching the Pizza Dog. Domino's ANZ Chief Marketing Officer Alan Collins is convinced customers will be converted from the classic sausage sizzle. That's a big call. That's a big target going after the classic Australian sausage and bread. Michael, where are we at with Domino's? Buy or sell?
It's a sell. Yeah, it's a sell. So
makes sense.
Look, at least that's right. I mean,
you're not fooling anyone with your
brave.
Pizza Dog.
Well, they've tried expanding into Japan and France, and they've given it a crack, and those ventures haven't really been working. So, they are trying to close stores in those markets because it's just not working out. So, it's a business that obviously is very sensitive to all the inflation we've seen. So people have less money to spend. Obviously, they might not necessarily buy these pizzas. The inputs have increased, so food, staff. They're just going through a really bad patch. Every time they announce their earnings, it's a disappointment. So it's in that what we call this sort of earnings downgrade cycle, which is it's just on the wrong path of where you want to be. I mean, they might turn around one day and sort of turn the business around, but you're buying Domino's here, you're taking a punt that this is the lows, but I just don't see it. The share price continues to slide. And interestingly, when all the IT stocks were going crazy a few years ago, Domino's was really expensive, trading on this high PE, similar to tech stocks, because I think because they had a fancy app, they were trying to sell themselves as a technology company, not a food company. But I think everyone finally woke up and realised, no, they sell food, if that's what you want to call it.
Well, yeah, that's right. You mentioned you're taking a punt if you're buying Domino's. I felt like I was always taking a punt whenever I bought Domino's.
Everybody was,
All right, so Domino's is a sell. Okay, it is time for the last call here in the No Holds Bar, and we're going to finish with some heavy metal, some uranium.
Let's go!
Uranium miner Paladin Energy Limited, ASX PDN, currently $9.73. Michael, is it a buy or a sell?
Yeah, it's a big buy. It's a big buy. This, this looks really good. So the uranium sector. So just a very quick overview. Obviously, everyone's talking about nuclear energy again, but when it comes to commodities, it's not just that demand. You need to look at the supply situation. So supply of uranium's gone up and down. Say over the past 20 years, you had this previous spike in the price of uranium 20 years ago because a lot of supply got depleted. And as what happens with commodities is the high price brings in all these other miners. Now everyone's trying to mine uranium.
Yep.
Therefore, supply goes up, price goes down. Then the issue with Fukushima in Japan basically just mothballed a lot of mines, and of course that means that supply just dwindled. So we're seeing really low supply. Demand is really coming in strongly now. The further issues with supply is, I think it's about 40% of world's uranium comes out of Kazakhstan, and the largest uranium miner there is having issues with supply just in the past few days. At the time of recording, the major company in Kazakhstan, Kazatomprom, had to downgrade their guidance for next year. So essentially what I'm trying to say is in the next few years, the amount of supply of uranium is less than the amount of demand for uranium. So I'm expecting the price of uranium to really spike higher here. So Paladin, the share price has fallen about 40%. It's still up quite a bit over the past couple of years, but in the past few months, it has given back about 40%. So for our viewers, I mean, this is the time to buy it. I think you're going to see some big moves in that stock.
Yeah, and I don't imagine a uranium mine something you can stand up overnight either. Like if demand's really starting to kick off, it's not like people can go, oh, well, maybe we'll start our own uranium mine. I feel
It takes years.
Yeah.
I think I'm going to buy it.
So Paladin is a buy, big buy. That's it. Michael Gable, Managing Director at Fairmont Equities. Thank you so much for joining me in the No Holds Bar. Where can people find you if they'd like to hear more from you or the team?
Yeah, thanks, Adam. FairmontEquities.com. As I mentioned earlier, we do look at a lot of charts. So we're basically combining fundamental and technical analysis with everything that we do.
Yep.
If you go to FairmontEquities.com, we have our weekly research where you can sign up for an 8-week free trial. So everyone can head there, get the research for 8 weeks, hopefully make some money out of it. And of course, we have our management service, which I'm happy to talk to anybody about. So FairmontEquities.com. If our viewers head there, there's a lot of great stuff.
Excellent. Great. Well, thank you once again for joining me. And you can continue the journey on the Equity Mates website. There's plenty of resources there. You'll find the buy or sell tracker along with the Find a Company page where you can get more info on each of the companies we've talked about today. But that's it for another episode of Buy or Sell. Thank you so much for joining us. Don't forget you can check us out on YouTube as well as wherever you get your podcasts. And I hope you'll join me next time when we jump back into the No Holds Bar for more Buy or Sell. Until then, it is bye for now.